because yes, everyone's waiting for the weekend. But yes, the markets are under pressure in today's trading session, Vinny, and it's not just the market, the rupee. It actually it weakened past 81 to the dollar for the first time ever, a level that we didn't even think, we didn't even anticipate. Only it was just yesterday when everybody started talking about it, saying that 81 on the rupee is likely, given the way how dollar is strengthening, and King dollar continues to strengthen. I could say that. And now you're seeing a tad bit of recovery come in the rupee. It is actually now strengthened a tad bit from those weak levels. But yes, it is a rupee that touched 81 to the dollar earlier in the trade. But let's talk about the markets and what are the markets doing this morning. And like I mentioned that not a happy Friday coming in for the markets. The weak handover that we got from the US markets. US markets fell for a third consecutive session, and Indian markets right now are heading towards the day's lowest, 0.1% gone for both Sensex as well as the Nifty. Nifty Bank is the one that is underperforming the benchmarks, 2% gone for the Nifty Bank as we speak. Let me talk about the other sectoral indices before I flag off which are the gainers and the losers in trade today. And talking about the sectoral indices, except IT and Pharma, rest all the sectoral indices are in the negative territory. You have IT that is holding on with gains of about 0.5%. Pharma also holding on with gains of about 0.5%. But on the losing front is the PSU Bank Index. That's the one that is seeing the sharpest decline in today's trading session. 2.5% downtick coming in for PSU Bank Index. You also have Power Index that is under pressure. Mid cap and the small cap index also seeing sharp declines in today's trading session. Let's now talk about individual gainers and losers in trade. And on the Nifty, you have some amount of green that you can see, nothing to be too perturbed about. You have DB's Laboratories with an uptick of about 2%. Tata Steel, remember Tata Steel made the big announcement where it is going to merge other companies to itself. So you have TRF, Tin Plate, as well as Tata Steel Long among the listed players that will be merged with Tata Steel. On the losing end, you have POWERGRID, Mahindra & Mahindra, HDFC, IndusInd Bank, and also among the losers, you have Mahindra & Mahindra Financial. That's the one that's taking a sharp knock after the RBI direction. So right now, Vinny, like you said, not a happy Friday for the large street.
Absolutely, but surely, an interesting day coming in for us in the studios. It's Friday, viewers, and if you know, on BNSN, we have BNSN Pathshala with us every Friday, and Kunal today is going to continue and tell us about more different chart patterns. And today, Kunal, like I can see coming in on the screens, gauging the resistance. We always keep talking about resistance levels coming in for the stocks, but how should one actually judge this? When do you say it's the resistance level coming in? And a very good morning to you, Kunal.
Good morning to you as well, good morning to Sheryl as well as everyone. So yes, the topic for today is gauging the resistances on how do we actually try and decipher that when a stock or an index gets into a point where there is a lot of supply which actually oversees the demand for the stock price, and that's where we try and call it that that's a zone of resistances and the stock has been unable to cross about those resistances. So I've discussed a couple of charts over here. This is the charts for the Nifty Auto Index. As you can clearly see that the Auto Index, just about some time back has been showing signs of resistances. So how do we, gauge the resistances? Is the inability of the index to try and scale past above certain level. So this is the level, for example, 13,400, which I have marked with a very straight line. As you can see that there have been rallies into the index closer to this point, but then the index meets with a resistance and you see intraday selling coming back into the stock, into the index. Same is the case with this candle. These are the exceptional candles where the index tries to penetrate this level, goes up on the intraday basis, but on closing basis, it's unable to hold past about this level. And then it sees a closing which is much below the resistance of 13,400. And same is the case with the auto index, which was facing a resistance at the 13,400 mark. So this helps us to try and decipher that this is the major zone of resistances, until the time the index or the asset class is unable to cross about the resistance, we try and reduce the long positions or we wait out for the breakout to try and initiate fresh longs. We look at another charts in a very similar kind of a light. The most recent rally which we've seen for the FMCG index, but then how the index consolidated. So as you can see over here that the index started to consolidate over here. This was the point where the index faced resistances. This was the point where you've seen supply overseeding the demand. Same happened for the index over here, where you've seen supply coming back. So it falls into a point where the supply oversees demand and the index is unable to break past above a level. Same was the case on this candle. This was one of the major attempts from the bulls to try and break past above the levels, but it failed, and you see the fall in the index which happened post that. So that's the importance of resistances. That's how we try and gauge that which is the zone where the stock would try and take resistance, unable to cross above those levels, and then try and get into a correction.
All right, so that's what Kunal taught us in BNS and Pathshala today, how to gauge resistances. And remember that this is the segment every Friday that we have for you, where Kunal will try and decipher all those jargons in the technical analysis world and will help you understand charts better. Thank you so much for that, Kunal. But for now, we'll take a break on this edition of Buy Now Sell Now. But when we come back, we will be back with your queries, so don't go anywhere.
Powered by Housing.com.
This market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we have our experts today, Kunal Bothra as well as Mr. G. Chokalingam. Very good morning to you, Kunal, as well as Mr. Chokalingam. Thank you so much for joining us on Buy Now, Sell Now, a show where we actually resolve all the viewer queries with regards to the stocks. But before we kickstart with the query segment, let me come to you, Mr. Chokalingam, and ask you, what should retail investors do given the volatility that we actually witness in the markets? We've seen that for the last 3 days, we have been seeing very volatile moves in the markets. Today as well, the markets are down and out. Given these circumstances, what should a retail investor do?
Don't get scared at all. This is the third time we are seeing in the last 2 decades, the rate reversal and the global economy slowdown. Definitely the monetary policy reversal in the US and Western world impacts India's exports of both goods and services. But you must know the fact that the goods and services exports account for only 20% of the economy. The remaining 80% of the economy is domestically driven, and which gets benefit whenever the Western world gets some pain. That is in the form of cheaper oil. Even day for yesterday, when the Fed increased the rate, immediate reaction was that oil went down below $90. So that's what rescued Indian economy and markets all 3 times, starting from a dot-com bust. So this time also the same thing would happen. And also the rate reversal crossed the midpoint of the targeted rate. Soon the global market also will start discounting the rate hike. So therefore, do not get panic and book losses in the quality stocks. And the second, focus on FMCG sector, because that was proven to be very safe whenever the Western world goes for a rate hike and their markets come down. And third strategy, to focus on very high quality small and mid caps, because this is a space which is going to do well for next 1 to 3 years. Today, the investor base is increasing to 12 crore, out of which around 7-8 crore investors have come into the market only in the last 2.5 years. And these are the people who want to make quick money and they prefer small and mid caps. So therefore, go for very high quality without losing the valuation comfort for small and mid cap stocks and without losing the management quality, balance sheet comfort, I am sure the next 1 year one can make a lot of wealth.
That's the view, and that's how you should be protecting yourself from the volatility, and the view coming in from Mr. Chokalingam. But let's get started with all the queries that you all have on the stocks, and we will be taking all of them. You can send us on our YouTube channel or on Twitter, as well as our WhatsApp number as well. Send us your queries everywhere. And Kunal, let me start with you. Then the first query we have is coming in on Gland Pharma, and this one is from Saroj Kumar from West Bengal. They want to know, does it make sense to invest in Gland Pharma at the current levels for a mid to short term?
Well, price-wise, yes, the stock seems to be attractive. I think it's hit a double bottom or retested the previous support from where it bounced back. So as I was discussing earlier about resistances, the stock has hit back into a zone of support for itself. So that support is just around that 2100 mark to 2200 mark for Gland Pharma. But the only question is that how long will the stock take to try and bounce back from here? Will it consolidate for another couple of months or not? That's the only question mark. Price-wise, it's attractive, but then we typically look out for stocks which are riding on high momentum, and momentum seems to be clearly missing out for Gland Pharma.
Okay, this one is from Shobha, and Shobha is congratulated all of us, saying that we are doing a very great job in actually clarifying all the stock-related doubts for all of our viewers. Thank you so much for that, Shobha. She wants to know about Biocon. She's holding about 800 shares at a price of around 320 rupees per share. She's planning to hold on to this one for the next 2 to 3 years. Mr. Chokalingam, do you think that it makes sense to hold on Biocon for that long? And also, should Shobha look to add at current levels?
Adding Biocon at current level, in fact, if she is able to get the principal, she can sell it for a couple of reasons. If you look at Q1 results, the biosimilar realizations have come down very badly, which was not expected. And when the realizations are going down in biosimilar, they have opted for a massive acquisition. And they have to mobilize, almost $2 billion to pay for the latest acquisition through Biocon Biologics. Now, another unfortunate thing is, just after they proposed to acquire the company with a few $1 billion, the rupee tanked. So the pain has compounded in terms of fall in the realization as well as, the rupee depreciation. So therefore, if she is getting back the principal, she can sell it off and wait for things to settle down before re-entry.
Mr. Chokalingam, I'm going to come back to you. We have this query coming in from Raj from Bangalore, and they want to know whether it's a good time to buy PNC Infra for a long term.
Yeah, the company has done phenomenally well. Recently, it has appreciated. If there is another 5% correction, then one can look at this PNC Infra.
From Chennai, and Kunal, this one is coming your way. Saregama India, 55 shares at a price of around 425 rupees per share. He wants to know whether he should continue to hold on to the counter or look to exit.
Well, short-term charts have started to become a bit more corrective for Saregama. Earlier than that, the stock was holding up pretty okay, just around that 400 to 420 odd mark. But somehow in the last 5 days, 6 days is where the stock has seen a sharp correction. And it's not just about the correction. Many of the indicators have, from being slight bullish to has now become bearish for Saregama, which means that the stock should correct a bit more. Ideally, for such kind of stocks, you should exit and then look to buy back again once these stocks come into their oversold territories. So at current levels, my suggestion would be to exit and then look to buy back again, assuming if the stock corrects to say levels of 320, 330.
Okay. The next query we have is coming in from Shravan from Ahmedabad, and Mr. Chokalingam, this one is for you. He wants an opinion and view coming in on Infosys, bought at 1,500 levels, currently holding, and it's making some loss over there. So obviously we've spoken about the IT industry. What are you seeing in terms of the IT industry, and should they add more or should they be switching to some other sector? The view they want is for 3 to 4 years, a long-term bet.
If it's a long-term investor, there is no need to worry about top-line IT stocks at all. Unfortunately, the correlation between IT stocks here and Nasdaq index has increased phenomenally. But in my view, many investors have not understood the fact that the business profile of our IT companies are different from the technology stocks listed on Nasdaq. They primarily make money not only from US, from outside US as well. and all the currencies are depreciating against the dollar. So the earning profitability from other countries will come down for those technology companies. And B, because of the rising interest rate, the real value of the money, cash holding they have, that also will come down. So therefore, in this monetary reversal, the technology stocks in the US are correcting very badly, but there is no need to panic because we are focused on IT services, not on the products. And ultimately, the depreciation of rupee would do good for technology companies, and also valuation has become very comfortable now for stocks like Infosys. So hold on. The moment you see some bottoming out of the Nasdaq pain, then you can add Infosys or any other large IT stocks like Wipro.
Maleshwar, Kunal, and he wants to know whether he can buy Sterling and Wilson at current price for the short term.
Well, I would suggest not. I think the indicators have somehow come back into a deep overbought territory for SW Solar, that's Sterling Wilson. The last 5 days, I think 4 days in fact, the stock has rallied from 280 levels to now 350 approximately. So it's been a steep rally for the stock. Yes, the volumes have shot up higher, but then may not be a good short-term kind of a trade. Ideally, in such scenarios, you have to wait out for one or 2 days where the stock gets into a negative territory, and that's the time where you should look to buy the stock. So don't buy it on high momentum. Buy it when the momentum recedes a bit. That would be a better strategy for Sterling Wilson.
Mr. Chokalingam, this next query we have is coming in on Bank of Maharashtra or any other PSU bank of your choice. Should one be looking at that space right now? And is it a good time to enter this? This is from
That you asked me. Yeah. This is a good question. I like it because after intensive analysis, I find that Bank of Maharashtra is the best PSU bank at this point in time. Whether you take, net NPA, quality of assets, or advanced growth, or the composition of the lending, or even the CASA deposit ratio, the low cost deposit ratio in the total deposits, this bank scores on the top of the league table of PSU banks, and at the same time trades marginally below one-time adjusted book value. So I may be wrong, but I believe that within the PSU space, this looks like a mini HDFC bank to me. So therefore, I would strongly recommend just focus on Bank of Maharashtra within the PSU banks.
That's the view coming in on Bank of Maharashtra. But let's talk about GMM Pfaudler. And do you think that this one is a good bet for the long term, Mr. Chokalingam? And because Mubarak is looking to enter at current levels.
I would wait for September results because this stock is known for volatility in the stock price as well as in the business performance. One can take a call after seeing the September results.
Kunal, the next query we have is coming in actually on Nifty call option, Nifty 18,200 call option. We have Manikandan from Mallapuram who's bought this 3 lots of this at 12 rupees and 29th expiry. What should they be doing with this?
Well, I think I don't see any major reasons why the indices should lift off immediately from current levels. I think we are still into a patch of consolidation, and consolidations typically end end at the start of a fresh expiry. So we generally don't see a breakout move or a breakdown move at the fag end of an expiry. That's how typically charts shape up for the indices. So I think since it's the September series expiry, I don't sense that the index would probably get closer to a breakout about that 18,200 mark. So my sense is that have some sort of a trailing stop loss and then look to exit.
Okay, let me club a lot of the queries that we are getting on Tata Steel, and I will head it directly to you, Mr. Chokalingam. So I have a query coming in from Aditya, who wants to invest 1 lakh rupee in Tata Steel on back of this announcement that is coming of the merger of other steel arms with themselves, or metal arms with themselves. You have Sailesh also who wants to know what sort of a benefit will the shareholders of Tata Steel get post this merger announcement. And I have also Dheeraj who's asking about how does this change for Tata Steel, and does it make sense to invest in Tata Steel? So all of them want to know whether Tata Steel is the go-to place right now, and I believe we have a couple of WhatsApp queries also.
So they do want to know on, what if they're holding the other companies that they are merging, like Tata Steel Wrong Products or something like that. So what should they be doing with that? Should they continue to hold this? How does this work out for them?
Yeah, to be very brief, this is a good move for Tata Steel for the long term. By merging, you get a lot of synergies because most of the companies are, making either mostly forward integrated production, all these subsidiaries of Tata Steel. So it's a good move in the long term. However, if anybody is not losing money, I would suggest that use this opportunity to exit the stock. In the short term, I see a lot of pain for steel industry. We know the steel exports have crashed in September quarter, and secondly, the realizations have come down drastically. And going ahead also, the slowdown in the Western economies and also in China in GDP growth, it doesn't look good for the steel industry. So I am of the view that short term it would be having more pain, and the market is yet to discount that pain. In the long term, beyond 2-3 years, it would be good. So if somebody is losing heavily, then one can hold it. But if you are not losing, it is a best time to come out. Even China, you look at the GDP growth and the real estate sector, which are all negative for steel industry. The way the iron ore prices have crashed, that is also negative for steel industry in the short term. So therefore, I would not advise buying into Tata Steel or any group company for the short term.
Okay, that's the view coming in on Tata Steel and the steel space as well. But let's move on. And Kunal, the next query we have is coming in from Aarti. She wants to know, for max to max 1 year time frame, where would she get better returns, Maharashtra Scooter or AU Small Finance Bank?
Well, I'm not sure max to max 1 year, but I think out of the two, I would probably prefer AU Small Finance Bank. I think that stock is looking quite strong. Now, the only concern with the banking stocks, and that's why you're seeing the sharp sell-off today, is the sudden jump in the yield, the 10-year yield for India as well. So I think that's one of the reasons. Now, it's very difficult to anticipate that how sharp can the yield rally up. But then it's a short-term adjustment. Once the adjustment gets over with, I believe that the banking stocks can get back into the line of outperformance back again. So having a quality stock would always be an added advantage. In that regards, I would prefer AU Small Finance Bank.
Okay. On that note, I think we'll slip into a very short break. Viewers, don't go anywhere, because we will be back with your queries after the short break.
आग को फैलने से रोकना.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction, and what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very...
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to continue with the viewer queries then. And the next one I have is from Akshay Bhandari. And he wants a view on Cipla, Kunal, and he's saying that he's holding Cipla from the level of 1,040 rupees per share, but he wants to know what sort of target and stop loss should he keep in mind for this particular counter, because what he's saying is that, according to him, it is breaking weekly and monthly charts.
Well, yes, you're right. I think the stock is breaking about those key levels. More importantly, I think it's breaking out of a 14-15 month of consolidation. So that's the biggest highlight for a stock like Cipla. And that generally ends quite well for stock prices, where they tend to come out into new range on the upside. And given the kind of texture of the markets would also require many of these other defensives like the pharma, IT, or maybe FMCG stocks to try and outperform. So I think even in that regards, the sector front as well, Cipla could be a good stock to bet upon. I would suggest a hold.
Mr. Chokalingam, this next query we have is coming in on two stocks. One is LIC and the other one is Talbros Auto. The viewer is holding LIC 15 shares and Talbros Auto, which he had purchased at 321 rupees. Should they continue to hold this or sell?
Talbros Auto, one can continue to hold. There's a lot of uptick in the automobile sales. LIC, yeah, I am sure he must be losing money. He can continue to hold, low float. And I'm pretty confident that, it would recover to IPO price within 6 months to 12 months. So there is no need to book losses in LIC.
A very puzzling question, Mr. Chokalingam, from Rajagopalan. Now, he wants to know whether is it better to buy chemical stocks like Polyplex or IT stocks like Infosys or Tech Mahindra at this point in time, because he's looking to invest for a period of 2 to 3 years. Two different sectors, divergent businesses all together. Which one do you think is the best suited for Rajagopalan for the next 2 to 3 years?
Next to 2 to 3 years, both look good. Certain selected chemical stocks and IT stocks, as I already explained, rationale for IT stocks. So you can definitely buy stock like Wipro, Infosys in a phased manner. For every small dip starting from today, you can buy. I would suggest you want to accumulate in the chemical space. The stock called GNFC, Gujarat Narmada Fertilizer and Chemical. Though the name fertilizer is there, chemical accounts for more than 90% of profits. I consider GNFC as a phenomenal chemical stock. It's available at around 5 PE. For 1 quarter alone, the EPS was 36 rupees. And it is monopoly in 3-4 products. And it makes 15 diversified chemicals. And 60% of the products are import substitutes, so it gets benefit out of depreciation indirectly. And most of the chemical plants are operating above 100% capacity utilization. And cash-rich company, more than 3,000 crore of free cash. I'm a bit surprised that such a high-quality stock trading at around 5-6 PE. I think 2 to 3 years, this can be even possibly a multi-bagger. So therefore, he can spread between both GNFC and Wipro or Infosys in the IT space.
Kunal, the next query we have is coming in on the recent favorites that has become ITC, obviously making new highs almost every day. Now the viewer has bought ITC at 262 rupees per share. Should they book profits here, given the price is at 350 approximately right now, or should they continue to hold for 6 months?
I congratulate to the investor for having conviction on buying ITC at 260 plus levels as well. I think you should definitely just look to hold on to the stock. When a stock like a category of stock like ITC, when it starts to get into a breakout mode and when it crosses those life highs for itself, a new trend emerges for stock prices. So I think in that regards, ITC is something which you should definitely look to hold.
All right, let's take this next query then, and this one is coming in from the Austin. And Austin has bought GARWARE High-Tech, 50 shares at a price of around 807 rupees per share. Mr. Chokalingam, he wants to know whether he should stay put with this holding or sell. He's a long-term investor.
I think he should book profit from this counter, fairly priced now.
Okay. Kunal, this next query we have is coming in on POWERGRID. A couple of queries were there, so I'm just going to combine them. Someone is holding POWERGRID 5,000 shares at 234 rupees. Should they continue to hold this or exit? This query is from VG from Kerala, and we have one more similar query on POWERGRID coming in as well.
Well, I would suggest to exit the stock. I don't find that stock any exciting in terms of momentum or in terms of charts. It's largely languished at this 200 mark, plus or minus some 10 rupees or 20 rupees range for itself. 220, 225, I think is the upper end of range or of resistance, and closer to 180, 185 is where you see the stock getting into a reversal mode on the downside. So I don't see any major trend coming out for POWERGRID. I would suggest an exit.
Okay, Vivek is writing to us from Dubai. He's saying that he has 250 shares of Paras Defense at 900 rupees per share. He bought it a year ago, and it has run up quite a bit in the recent past. Now he's asking, do you see some more steam left in this one, or should he look to book profits? What's your take on this one, Kunal? Paras Defense, do you think it makes sense for him to exit this one, or should he hold for some more time? Because we had Nilesh Shah of Envision Capital yesterday on ET Now, and he said defense looks like a 8 to 10 year play.
Well, yes, it does. But the only concern is that when these stocks get into a correction phase and when the market gets into a risk-off phase, they're bound to be that the ones which have been high-flying sectors and stocks, they also are prone to sharp corrections. So that's the only catch with these kind of names. So you have to have that short-term bit of trading advantage to have in these kind of names. If you're sitting in good profits in stock like Paras Defense, I would believe that it's a good time to try and book out profits and then look to buy them back again, assuming if the stock corrects by 10%. So maybe sub 700 is where you can look to rebuy the stock.
Mr. Chokalingam, this next query we have is coming in on CG Power. Mr. Ghosh from Delhi, initial buy price was 12 rupees for CG Power, and obviously they're making a huge profit. They're holding 20,000 shares of this. Should they buy more now, looking to add more, or should they sell it and book profits?
I would suggest book profit. It's a phenomenal multi-bagger for him. Not just because of that, the valuation also got stretched in the process now. Book profit post September results. If stock falls minimum 10%, then one can consider re-entering.
All right, let's move on then, and let's take the next one. This one is coming in from Jai Krishnan, and Jai Krishnan has been asking this for a while. I believe we've already answered this query last week, but nevertheless, I will take it today. This one is on Godrej Properties. 1,586 is the buy price for the medium term. Kunal, Jai Krishnan should hold, sell, or average?
Well, I would suggest to hold on, not to average. I think if I'm not wrong, last week also I had mentioned that let the stock break past above a certain level where you'll get a confirmation that it's trying to get back into the thick of uptrend. Godrej Properties has already corrected in the last 12 months. I think it was the first real estate stock to actually top out in the mid of 2021. I think the month of September, October, somewhere where the stock topped out at 2,400, and now it's corrected by 50%. So the major part of the correction seems to be over. It's now spending a lot of time at this 1200 mark. So I would suggest to wait out for Godrej Properties. Don't average at current levels, but average once the stock gets into a rally mode and especially breaks out above 200-day moving average.
Okay. Mr. Chokalingam, the next query we have is coming in on Tata Elxsi, and this one is coming in from Sanjeev Sinha from Lucknow. Wants to know if it's a good time to purchase this for a long term.
I would not suggest, of course, for business-wise, the growth-wise, it has been doing phenomenally very well. But then, the valuations are extremely stretched beyond the profit growth it is posting. So if stock falls minimum 10%, then only I would suggest buying Tata Elxsi. Otherwise, even at this price, one can sell and book profit.
All right, the next query that I have is coming in from Mr. B.R. Bhatia, and Kunal, this one is for you. He's asking, should he shift his holding from Sun Pharma to United Spirits for a period of 1 year? He's not told me the buy price that he's already purchased Sun Pharma at, but do you think the strategy makes sense given that now we are seeing even Sun Pharma pick up, right?
Absolutely, yes. And Dawa Daru, I think both these sectors, they should do pretty well. And given the state of the market, I think it makes a lot of sense to hold both of these stocks. So in case if you're not in any kind of an emergency to shift the stock from United Spirits to Sun Pharma, I would suggest to have United Spirits, and if possible, if you have additional funds, then I would suggest even Sun Pharma at current levels. Have been bullish on the stock in the last 3 days, and I maintain that stance and the calls which I've been giving on Sun Pharma that the stock is due for a big breakout very soon on the very short-term chart. So would suggest both of these stocks to be held on to.
Okay. Mr. Chokalingam, this next query we have is coming in from Vishak, and this one is on KPIT Tech. Is it a good time to buy this at the current valuations?
I looked at the valuation. I prefer Cyient to KPIT. Cyient is much cheaper. I believe that it's a very high quality stock and a lot of exposure to aviation industry, which has picked up worldwide. So therefore, I would suggest Cyient instead of KPIT.
All right, let's get this query coming in from Sagar then. And actually, I was very stumped with Kunal's statement. By the way, I should tell all of our viewers that Kunal, apart from resolving viewer queries, also makes sure that every day we get a quote from him. But it is only for Vinny and me that we get this special treatment where he gives us a quote for the day. And yes,
absolutely.
Absolutely. But if you're following Vinny on Instagram, you will find that quote for the day over there for sure. But let's talk about this query coming in from Sagar. And he wants a technical view on Lakshmi Machine Holdings, Kunal. 650 shares he's purchased at sub 3,000 levels. So he's made sure that he has kept targets for this particular holding. So he's saying it's beaten his fifth target that he had for it. And his fifth target was 13,000 rupees per share. Now he wants to know, do you think this stock will surpass 15,000 or 17,000 anytime soon?
So the chart seems to be quite okay for Lakshmi Machinery. I think it's doing quite okay. Very steady, slow gains for the stock. But the only concern when I'm seeing the daily charts for the stock, even though I don't track the stock that often, but just looking at having a glimpse at the chart, the indicators have started to get into a reversal mode. So it probably indicates that the stock is now getting into a zone of resistance for itself. Maybe over the next couple of weeks, you might actually see the stock dropping down to maybe 12,000 or even 11,000, 11,500 mark as well. So if you're in for some sort of a short-term trading within the gamut of your long-term investments which you've done for Lakshmi Machinery, then I would suggest an exit at current levels and then look to buy back in case of the stock corrects by 10%.
Kunal, actually, I'm going to come back to you again. We have a query from Vikram, and this is on Ashok Leyland's September expiry. They which is at 170. They bought at around 2.06 rupees. What should they be doing?
Well, I would suggest to exit. I think the stock today has given a bearish candlestick pattern. So what you can probably do is you can have a trading stop or end of day stop loss, assuming if the stock doesn't recover and if it closes at current levels of 159, 160 where it's currently trading, then I believe that there could be a more short-term built-up on the downside for Ashok Leyland. So keep that as a stop loss and then look to exit the stock in case if the stock closes on the negative territory below the 160 mark by the end of the day today.
All right, and with that, let's kickstart with the rapid fire then. And first one coming your way, Kunal. Kaustubh has asked a query on Laurus Labs. Even after a 50-day crossing 200 DMA, Laurus Labs is falling. He wants to know when will the stock gain momentum?
Well, yeah, I think it's a good observation, but then the stock has this history going, going backwards as well, that it's never respected a golden crossover. So in that aspect, I would suggest a hold or exit.
Okay. Mr. Chokalingam, this one is coming in for you. Is it a good... Okay, actually the name of the stock is gone away, so I'm going to take the next one. Then Bandhan Bank is the next stock. Nagarajan from Chennai wants to know, they have Bandhan Bank at 330 rupees. Should they continue to hold this or sell it? Mr. Chokalingam.
Oh, yeah. I would suggest hold it. If it improves even 5-10%, exit and then move to quality bank like Kotak Bank.
Okay, Akash has 237 shares of Cabra extrusion. Kunal, do you track at 429 rupees? He wants to know whether he should hold or average.
You can continue to hold.
Okay, the next query we have is coming in on Amara Raja batteries, and this one, the average buying price of Akhil from Delhi is around 350 shares they are holding. So what should they be doing with it for 2 through 3 years time period, Mr. Chokalingam?
One can hold on. They have been making a lot of proposals in EV, so one can hold on.
Okay, Ramesh from Coimbatore wants to know about Hero MotoCorp. Intraday view is already purchased 1,000 shares at a price of 2,790 rupees per share. Is it a right strategy to buy this particular counter, Kunal?
No, I think it's not a right strategy to buy the stock. It's one of the weakest stock from the auto pack. But then since it's an intraday view, I would suggest to hold on. I believe the stock should come back to your cost price.
South India Bank is the next stock, Mr. Chokalingam. Subramaniam from Mysore wants to know, he's holding 40,000 shares at 9.25 rupees. A long-term view, should they continue to hold?
I would prefer Bank of Maharashtra to South Indian Bank.
All right, Madhuri has Balakrishna Industries at 2,243 rupees per share. She's making loss, wants to know what should she do, sell, hold or average. Mr. Chokalingam, is it a good company fundamentally is also what she wants to know.
It's a great company, but I think the September results will be bad. So wait for September results before buying the stock.
Okay, and with that, it's an end to this edition of your stock-related queries. Viewers, thank you so much, Kunal, as well as Mr. Chokalingam for joining in with us this afternoon. And viewers, we'll be taking most of your other queries on Monday as well, so don't go anywhere. On that note, we'll step into a very short break.
Easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a